Okay, let's keep going. So the euro did, like we present over the weekend, a 5-way move with an extended wave 5. So we were saying 2681, 2691 area to end the move, extended a little bit because it's very weak. So technically speaking, this was what we like. We were expected to end it here by extend about 20 picks, so but that's okay. So it did a 5, and most important now, it did a 5-way move here, which is telling me that most likely a dollar weakness should continue, like we explained in the dollar swings. So the euro should get at least to around 128.70 on the week and the equal legs. Let's say that goes to 127, 128.23, 128.70, and should renew the downtrend. That's betting in the idea that the dollar swings is in an ending diagonal and it still got more outside. All right. So that's the idea for the euro. And then a small time frame. I mean, it did the 5-way move early today. I put my clock alarm, my alarm to wake me out when he reached the area around the 127.70, and that's what it did. And then I saw the 5 ways. This looks corrective. The structure that looks like it's taken to the downside is as follows. You see, 1, 2, 3, 4, 5. It did 5 swings here. It did 2 back, and then it did the 3 onto here. It's a very nice 5-way swing to the 261A. Then it went back to the 23.6 there, and then it did the 5 equals 1 at the top, right? So a very nice 5-way structure there. Now it should get more US dollar weakness. It bounced from the 50 back, but there is 5 visible swings. 1, 2, 3, 4, 5. There is no correction in 5 swings. So that's telling me that we have 2 ways to go here. First way, this is A, and then we're going to test here and lower. Or it's going to, another way is A, B, C, W, S. And then maybe this is A, this is B and a flat, and then it's going to test here. But I would say that is a huge percent that's calling for more outside or more US dollar weakness, like we explained on the dollar swing and the dollar swings. Yeah, I like the 26.91 area. I like that area. I like 27, 27.10, 26.91, like we present to you guys in the trading ideas. Now, minimum 127.30 is 27.40. It should be in place there. That's for the euro. Now, I'm going to start answering questions. I mean, it's a very well-defined, path. And what I'm going to do is I'm going to go over the trade ideas that we send it to you guys, so you guys know what we're thinking. We believe that the Norwegian, the New Zealand dollar, it did 5 ways up to here, and it's doing a flat. We say that, I mean, it's a very good trade, if that being the case, to sell it around 78.70 area, looking for the flat against this high, to look to another leg to the downside minimum around 77.40 area. That's one of the ideas. The other idea comes in the dollar yen, when we see that it bust for the triangle. Yeah, it correlates with the euro, because technically, I know in that degree, no, that's true. I see 5 ways down in the dollar yen. I see 5 ways out, and we believe that at least a move in this pair to 77.50 is in place, which correlate very well also with the scenario of the dollar in some degrees, or with the other one. Another idea is this one, which is this one, which is the euro pound, very visible, 1, 2, 1, 2, 3, 4, 5. We should be in wave 4. And then I believe that this one was fear already when it bounced from the 38.02 right there. It dropped. So this should be another winner right there. Anyway, you have to stop define right here. And those are the ideas. Let me see. Let me remember. Another one is gold. We're trying to provide as much trades as we can, guys. And DV is working and sending an email explaining how it works, everything there. This is gold. We believe that gold, based on Elliott Wave aging, is going to go to the downside, either in wave C to a new low, or it's going to do good to around here and higher. So I see 5 swings right here. So minimum, I'm expecting gold to drop to around 1575 as a minimum. Otherwise, it's going to go below 1400. I want to show you something. Talking about gold, this low can be the low already. If you take a look at the weekly chart, the reason that he stopped right there at 15, 18 area is because if my count is correct, he did 1, 2, 1, 2, 1, 2, 3, 4, 5, close the cycle, open 3, 4, and 5. Now, if that's the case, you got to measure the 38.02 of the wave 3 that started here. And that 38.02 comes exactly when the low is. So keep that in mind. That gold low can be in already. The minimum is there, 1, 2, 3. So it can be in. And then with the first leg of the wave 5 is the 5 ways that we see here. Keep that in mind. That can be the case there. And then the final idea is the one that you guys know already. Is the dollar swigs, which is selling the dollar swigs around 97 area. So those are the idea. Now, any question? I'm going to start with dollar cat. I remember there was another question, but we lost the question. Gerson, if you can send me the question again. I believe it was euro swigs, right? Okay, the dollar cat is very tricky. And I tell you what, dollar cat have 2 scenarios. Oh yeah, I cover it right now. Dollar cat have 2 scenarios. The B-way triangle, like it's presented there, when from here you have A, and you have A, B, C, D, E. But if you're spreading US dollar trend, I would say this. Most likely what's going to take place is that you can get, this was a 3, this is less likable right now, even though it dropped from the trend line there. But if we are not tricked and we don't have a cheater here, you can make the case for discounts also. When this is B, and then you can make the case that this is either A or W here, like New Zealand, like Aussie, and then you have 3 here, 3 back, and then you have 1. You're going to get a B, and you're going to get a C here before going lower. That can be the case for the cat also. And the S&P can be doing something very similar too. That can be the case for the cat. I'm expecting the strain. So it has to be very unique that trend line hold right there. Now, the Euro Swiss, let me see, we don't follow it anymore. We used to, but I won't follow a pair of that. I know it's not a free trade. That's going to increase. Euro's going to rally. You follow? The last time that this happened, the euro rallied too. The question is what's going to happen with the euro when if they peg the 120. I believe that the euro is going to rally as a group because they're going to buy the euro. I don't know. So, a mess. I mean, I cannot trade that pair. But I think that if they promise that they're going to hold the 120 area, buy. I would buy now with a stop below 120. That's a good trade. At least you know that you have a friend, which is the central bank. So, any other pair, guys? Any other question? This pair is very interesting. Let me show you the Euro Aussie. Because the triangle trust, I believe, is looking to around 122 to end wave 3 of the trust. And then the 4 and the 5, when you have a target around 114 to end the whole move. 114 should be 114 also in the euro, in my view. Or lower, can go lower. I put in 5 equals 1, but it can go lower there. So I like all the trades that we send, all those trades ideas, to be honest with you guys. The thing is that right now you're going to get 3 or 4 trades every day. And then you guys pick which one you guys decided. All you guys use indicators. Then with the indicators, you can choose which one was better for you guys. Any other question? Okay, which one I like better on the daily? That's a tough question, my friend. I tell you why. Because as a trader in the euro, they're talking about the euro. As a trader, I don't trade that much the structure as I trade the aging of the Elliott Wave. In other words, nobody in this world knows something. Knows this. Let me explain it to you. Nobody in this world knows if the triangle trust happened here or we are in the D wave. Nobody knows that. So you cannot speculate about something that you cannot control. So what you have to do is play the Elliott Wave agent. You know that you have an exhausted move. You know that that move is going to find a huge, I mean, a huge area of important FIBO levels, because FIBOs are everywhere. But 126.02 is the 76.4 of this move. Then you have the equal legs of these two coming at 124.42. You have the equal legs of these two coming at 125.10. Those are, you have the monthly trend line right here coming also around 126. So you have like I used to say when I was teaching Forex, you have a lot of stop signs there. These are stop signs to this move. So the combination of the southwestern move with all those stop lines is going to create the bounce. Because remember, waves are created by FIBO levels. So after, then you will realize which one is the right count. My best guess is go with the more aggressive one to prove you wrong. If you're going to correlate the market, I would say that correlate better the D way, because I'm expecting a deeper correction in the dollar swings. Like we said yesterday on the forum and the seminar, is the clear structure of the whole market. So you got to play that structure to prove you're wrong. But nobody's going to know which one of the two is. This was the first test of the monthly trend line. And look the bounce that happened there. I don't expecting that bounce, like Rafi say, that the euro is going to bounce to 150. No, I won't say that. But I'm expecting at least a 300, 400 picks bounce. If it get bigger, then bigger. I don't care. But that's how I see it. That's how I see it. That's a strong. What do you mean? That, yeah, the trend line is going to be tested for sure. You agree? I mean, that's a good question, Chris. I mean, I don't know. That's, guys, he's asking that what's going to happen. In other words, what he's trying to asking me is what's going to happen if the euro dollar goes to 115, how they're going to hold 120. I tell you something. I can show you exactly. I can show you the euro dollar dropping and the dollar swigs going higher, and the euro swigs going higher. That happens before. I don't know. All I'm reading is the bound. All I'm reading are the charge structures, and the chart structure is calling this is bearish overall, very bearish. This is calling for a move to 114 minimum. To be honest with you, the euro swigs do not have any structure. But I got the dollar swigs that have a very, very nice structure. They will have to spend million above. So I don't know. All I know is that when this trend line goes, you're gonna see 114 minimum, 114 to say the truth. It can stand very easy to the downside and goes to 105, very easy. And you can have missed this move. Me and James and DV, we were analyzing the other days this. I'm expecting something like this if it's the E way with the B place already. So anyway, Elliott Wave edging is calling for a bounce pretty soon. Got no doubts in my mind. I'm going to keep the same bounce. I see people, I don't know, James, have you seen this, DV, or you guys, labeling this as an impulse? That's unbelievable. Labeling this as an impulse. I mean, that's not an impulse in any degree of imagination. It's like a nest. But I mean, it's like a nest or seven nest. 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2. I don't know. You're just gonna go to minus 25. I'm bearish on the euro. I'm bullish on the dollar, but we know when the correction is coming. Exactly. It can go down. Unbelievable. Yeah, it can go down. Very easy. But I mean, as a service, all we can say to you guys is any 3 ways back in the euro, you have to sell it. Because I guarantee you one thing, we know one thing, that the whole market this one is a 3. You know what I mean? So how are you going to... Exactly, that's the point. This one is a 3. It's almost equal legs. Look. A 3. There is no divergence at the lows. So you need to get a 3 from whatever truss or the triangle is coming. This is a 3. Everything is 3 ways here. 3, 3, 3, 3. Everything is 3. That's the key. Exactly. That's good, James. Now, you got to play the 3s. Well, you play the 3s. Very easy. If B is here, you're going to sell the 3 here. I mean, I don't want you guys to get into the trades or this bounce thinking that it's going to go to 145, 150. Because from my experience in the past, I was the most frustrated person in the world around this area. The most frustrated person in the world around this area. Why? Because they don't give you the chance to jump in. We missed 142. Even when we say it, every time that I mention that number, I get mad. Because right here, we knew that this is going to happen. And we missed that trade. Now, if you have a 142.58 right now as an entry, you should be some play in the Caribbean. And adding and letting the market make you money. I don't see trading that high, to be honest with you. I don't think that I don't think that it's gonna go. Look, that trend line there is key. But I know that this count is correct. Either this one or the other. And like I say, around here I was very mad. And everyone was expecting a 50 back. It never happened. 23.6, 38.02. And that's going to be the case again. S&P do not have room to much to the outside. We have a count that can go to 1,400, but well, I mean, I have a 5 ways on the dollar. So same day that the S&P top, so I would say that you have to play with a 1370 to prove you wrong. That's my idea right there. Any other question, guys? I can't wait to serve the dollar sweeps. But at the same time, I cannot wait to buy the dollar swigs when it gets around the 80s. And leave it there for until we get at least 120. Same with the cat, same with everything. This is the year of the dollar, in my view. Dollar is going to be, I can give you the pass in the first quarter, but after, should be, something's going to happen. I was talking to James the other day, and this is a very good point. The trick of the trader is not jumping to the wave 3. Is because in the wave 3 is when the trade become popular at the end of wave 3. It's getting at the beginning. You see this 98% bears on the euro, that's when it gets scared. Because I remember, I remember right here was around 98, 95 to 93, I believe it was. And guys, James, you remember it was around the 90%, right? On the bears, right here. 93, 94, I remember on TV people saying that. Look, that was going to happen, guys. The first news that comes on the market is going to justify the short squeeze. That's how it is. That's how it is. Any other question, guys, about any pair? Oh man, I got a kind of cold yesterday. We got a little get together outside my house. It was in the 60s. Any pair? That's what I like. I know that everyone likes the euro short, but sell the euro. Not now. Wait for the euro to bounce. It's going to bounce. Every 3 ways, sell it. I doubt it that the euro is going to make a 5-way move out of the lows because they won't let him make 5-way move. Like right now, in the small time frame, what do you think is going to happen here? Let's say that, I know it's not a low, but let's say that that's the low. What do you think is going to happen at 124, 128.42? They're going to sell it there. Or 128.71. They're going to sell it there. And then there's going to be a point that they give up. And then the rally is going to stand. But that's when Elliott Wave is like nothing else. Because I understand Elliott Wave is telling me that the bounce, it can be a higher degree bounce. So I'm expecting higher degree move. This was very, very nice right here. The indicator that we use as of right now is not still a sell, but it's telling me, look at the divergence that I got last night. What it's telling me is that as far as it becomes a sold right here, a sell, a buy, it's going to go to the outside. But it looks bullish there, right? Wait to get this. Look at the 4 hour. Where is it? Which is telling me that he's going to do this and retest. Something like this. Look, right now, this is the first leg of the 3-way. Right here. Look, we are right here. It's going to drop tonight. It's going to be a slow. It should happen by midnight. because at least we need 2 periods of 4 hours to get there. And then it's going to be a rally that is going to cap. You see? And that's 3-way. And then we're going to get divergence in the 4 hour. You see how it works? You see, Davey? I know you like it. You see how it works? This is bearish. This is bearish in the biggest time frame. There. Now, let me see the 8 hour. It's coming out of the lows. The next one is going to take it a little higher. The next one is going to take it a little higher, and then he's going to do something like this. And then is when he's going to create the bottom. Let's see the weekly. The weekly is about to become bullish. That's what we know, that the bounce coming. A monthly, what else I can tell you? Look. Let me see if I can get a daily here. No, because sometimes some charts, I need to go. The daily should be also going down. But I know that we close. This is weekly, 1 second. But I like the long goal if I see corrected to the downside with the tagger of 2000 goal. This is the daily. You see? You know what this is telling you? This is telling you that there is more downside because the blue is leading the red. But the blue is the fastest one. Now the red, but you see, James, what I was explaining to you the other day, how the highest time frame, they are aligning on the lows. And that's how the bounce happened. And then to get short, because it's a big move that's coming, they need to get to the top again. And then the sell is around here. Any other question about any pair, guys? Aussie? Well, Aussie did not make a 5-way move from the top. This is not a 5-way move. This is a 3-way move right there. The low is the low. So I believe that, I don't know, I was trying to feel, this is the hardest pair that we have when it comes to the long-term chart. Why? Because I can know in knowledge the idea that there is 7 swings. But I was thinking that I can call 3 ways here, and then from here I can call another 3 ways. So this is a double zigzag. I believe that Aussie is correcting this move. It's going to drop either to 158 or a little bit lower to 99.80 before bouncing. Why bouncing? Because I believe that we have this move right here, this one correct, this move, but the extension was minimum. So I believe that this is our daily on Sunday, so I believe that he's going to correct. Now we should be on the S way here in some degrees. And then should do this and make a rally back again. And then from there, if you take a look at the weekly, maybe there is no any type of triangle in LZ. We are not labeling as a triangle because I don't see the triangle, to be honest with you, on the RSI. You see, I believe that most likely, let me take the triangle lines, that most likely this move is going to extend to the upside. Most likely it can respect this one, and then it's going to drop to 91. And from there, let's see what happens. You see, the move is A, B, Z in the dailies. But the C didn't pass this time too much. And then it didn't make a 5. So I'm assuming that what it's going to do is it's going to turn higher soon and make the double zigzag there. I was explaining somebody yesterday that the reason that I don't like this to be the top is because I like this. On the RSI, in the monthly RSI, the move from here to here is no divergence. You see that, gents? There is no divergence there on the monthly chart. And then on the weekly, you see 1, 2, 3, 4, 5, 6, 7 swing. Of course, this is the 3 of 3. It gives you divergence against this one. This is the 3 of 3. And then you got the 4 of 3, and then you got the 5 here. This is the end of wave 3 right here. That's what I'm targeting 91.76 in ounce. But I don't know how that's going to happen with the risk aversion coming to the market, to be honest with you. That's very, very interesting there. Because we get excited about the dollar sometimes. And outside of 3 or 4 pairs, all we got out of the dollar is a 3-way move. Like the dollar cat, what do you got in the daily? 3 ways. But it looks corrected to the downside again. But I don't know. This is very clear here, at least in my mind. You see? 1, 2, 1, 2, 3, 4. You're going to see how that's a 3802 right there. And then you have 1, 2, 3, 4, 5. And I believe it can be a triangle, don't get me wrong, right there. But don't get surprised to see 91.76. If it is a triangle, well, the rally is going to be bigger. Any other pair, guys? Thank God that I'm talking. S&P, 1 second. Let me see, because DVD, very, very, very nice. Let me find it. I should have it here someplace. The DV counts. DV, you have it on your hands right there. Can you please send it to me? I should have it here anyway. 1 second. Let's say keep it. Yeah, bullish. All those 3, Cooper, I believe that Cooper is bullish until goes to 4, go to 12, at least 19 something, 12,000, and S&P, who knows? But bullish. 1 second. DV, are you there, right? 1 second, because I want to show you his count, which are pretty good. Exactly. That's the way it should be, yes. 1 second. If I have it here, no. Okay. That's the idea, that it goes straight higher. But I don't know. I'm very suspicious about the S&P because I'm expecting a rally in risk-off. So the most logical path, believe it or not, is that, believe it or not, we still are within B in a way of a flat. Then that being the case, Zach, which one you like with your system? We can be like A, let's say something like A, B, and then something like this. And then the market rally from here. Exactly. The flat is the one that can play with it. That's why that's the one I like, because I see lacking momentum here. You see the angle of the structure of the wave, how that's not a wave 3 or anything like that. So I like the flat. Then the rally that's going to take the dollar higher for last time, it's going to be the C wave. And then the rally, this rally, is going to be the recovery in risk. That's technically, be honest with you, that's what I like. You see that, but there is another possibility, which is, but the flat is the best one, in my opinion. What do you mean flat in Europe? I like this scenario. So that's what I like. I know, guys, I mean, I know that a small rally minimum is on the book. It's going to happen. But I see before the rally, I see yeah, exactly. The move to 125, 124 in the euro is the B way here. And then the bounce is going to be the rally. It's unbelievable. But, well, that's how it goes sometimes. There's going to be a powerful trend line here. And that should be the one that that's the one that can contain the downside. That's the scenario. I know that is one more rally minimum on the dollar, based on the dollar swings. And after, we should see a rally. Any other question, guys? Why besides the market can push the market makers? Market do not six. And you're gonna say that sounds crazy. In my opinion, it's a whole manipulation by the big money guys. It's too perfect to be random, too perfect. Yeah, you look. I was telling that to the V over the weekend. Most of the time with the correlation with the S&P and the euro break, because he's asking me if the euro can go higher and the S&P drop. It's happening. Most of the times, let me show you that correlation for a second. One second. You give me 1 second, I want to show it to you. Exactly. No, that, you think. No, that's not true. That everything is manipulated for the big money guys. I have no doubt in my mind. I've been saying that for years. It's too perfect. I mean, think about it. It's a $4 billion market every day. How everyone can get in order to buy or sell at this, why the market stop at the 618? No 10 peak higher, 10 peak lower. Why? Come on. We need to be smarter than that. Don't you guys agree? I don't believe anything. That's why I listen to ESPN all morning. I don't waste my time with CNBC. 1 second. It's better listening about Miami Heat. Those people yelling right there in CNBC, lying to you. Okay, you see, this is S&P and the euro. Euro being the black, S&P being the brown one. Guess what? Look, right here, let me put it on the weekly so you see it better, be a time frame. If you see right here that the euro drop, S&P rally, right? Now, that's again in favor of the S&P, the correlation. It broke in favor of the S&P, like you used to call it. Now, right here, you see, it's the same. Right here, they correlated. I haven't seen any when the euro rally and S&P drop, to be honest with you. Maybe this little part right here, when the euro top, that the S&P start dropping early, but where S&P was dropped, this is the only one, look, technically, yes. The S&P top early here than the euro, then S&P drop and the euro keep rallying. But at the end, they catch up. You see what I mean? It was right here, but that happens most of the time in a significant time. But most of the times they correlated. Look, right now, S&P is rallying, Euro's dropping. So right now, we should be in a place like this. Look, it's very similar to this. I was looking the other day. Look, the euro dropping, S&P rallying, then S&P drop, the euro bottom, and they both rally. That's very similar there what's taking place now. I was seeing that the other day. So don't get surprised. The scenario that we're playing can be in place, guys. Look, if you follow this analogy, you should get a drop in the S&P. The euro finally should drop. Then the euro should rally and the S&P should rally. If you follow that analogy there. You see what it means? And then they both should get together at some moment. This was 2008. Any other question, guys? Being about an hour already? Okay, what's the other question? Very, very well correlated. Let me show it to you. Look, very well correlated there. That's Aussie with the S&P. I would say that I have a higher degree of correlation as of right now. That's why it's hard to believe what I see on the weekly Aussie. But well, I've been long around Elliott Wave long enough to, if you see dropping at Aussie, ignoring that in some degrees. But I would put it like down to prove me wrong. But you see how well correlated they are. Any other question, guys? Okay, guys, so let's leave it there. See you guys during those days. Thank you.